Hi guys, thanks for tuning in to another episode of Nuggets News. We're back with our monthly commodities update with our friend Marin Katusa. So welcome back, Marin. How have you been?
My pleasure. I even shaved for you.
Yeah, that was a pretty good beard last month, but look, maybe I'll have to have a shave soon. It's been another exciting month. Gold's been kind of correcting, but I tell you what, there's never a dull moment in the world of geopolitics. So I mean, we've seen natural gas prices fall. We might touch on that because we spoke about the relationship with oil there. Some interesting uranium news. So lots to get into. But where do you want to start with your overview of what's happened in the past few weeks?
Look, gold at 19, whatever it is today, 45, 1950. We're recording this on the 26th. Tomorrow, I'm in Vancouver. The 27th, Powell will make his comments.
Yes.
We've stated expect volatility, expect profit taking. Gold's had an incredible run. And again, 1950, these mines that we're invested in are having IRRs or your margin of profitability of over 100%. You always want to stick to one of the deals that we've announced that our subscribers are up over 500% at $1,500 gold. It has a 2-year payback. You're talking about phenomenal IRRs. So 1900, first of all, no analyst worth its grain of salt is actually using $1,900 gold. It's sexy, it attracts new money, but we're entering a phase where if gold can stay above this, 1750, 1850, you got the election coming. The generalists, the intelligent investors, the investors who read Berkshire Hathaway are going to start noticing gold. They're going to start noticing the profitability of these mining companies and say, wow, these aren't just a bunch of, roughnecks trying to dig holes in the dirt and are never economic and never pay a dividend. They're going to realize that this is a good business. So it's this cycle that's going on. The industry leaders like Bristow, who runs Barrick, Sean Boyd, who runs Agnico Eagle, they publicly stated, hey, we're not going to go crazy binging like the last cycle because it's about profitability. So be careful where you're placing. We're seeing increased geopolitical risk. I know a lot of people keep getting bored of me, but talking about the geopolitical risk, but it's just starting, right?
Yeah.
This is just we're in the early days of this cycle, and be very careful where you're placing your money.
You touched on in the pre-interview, we're going to get into the relationship and the ratio between energy and S&P 500. But I think another ratio that's super interesting is uh, what's been
Materials. Yeah.
what's been happening in gold, as well as the relationship to say the GDX, so metal price versus miners. But the banks, so the banks are really getting crushed. In Australia, people are obsessed with owning the big four banks and getting their dividend, but I just don't think banks are going to be that profitable in the coming years as interest rates are getting smashed. And now you've got these gold companies in Australia. Some of these guys have got a price of 1,200, 1,500 Aussie dollars, and gold's getting up near $3,000 an ounce. So big rotation of capital that hasn't started, as you say. None of the big funds in Australia are saying, hey, let's rotate out of banks to gold stocks for dividends at all.
Well, you bring up an awesome point, Alex. Like, it's not just Australia. This love affair with banks that they can only go up. It's not just low interest rates. They're stuffed with mortgages, and I would compare Australia's mortgage bubble very similar to Canada's. We like Vancouver and Toronto, and these elevated mortgages and the personal debt, is in the highest amongst the world. So the banks don't just have that low or negative interest rates, real negative interest rates, but also they're dealing with so much mortgage money that the Canadian banks have that same love affair, and it blows my mind. But they also know that they're too big to fail, so they're going to keep getting funded by the government. But there's another thing that people need to keep in mind. And people go, "Oh, Marin, you're a deflationary, you're a negative guy." I'm like, "No, I'm a logical guy. I'm a sound mathematician." Even though the Fed Powell's going to print the digits, okay, he's going to push the button. But just because M2 money supply increases, the velocity of money doesn't necessarily get through to the system. So these are very interesting things that people don't talk about. And when you look at, that's a deflationary event, first of all. Second of all, you look at how much money and how quickly the flow of capital has come in. And what you were referring to, what we were talking before we went live here, is so much money, the passive money, has gone into the actual exposure to the metals, not
Mm,
not the ETFs and the actual companies, but let's just focus on the metal.
mm,
And you've seen this wild disparity, like over 10 times the amount of money, because like you said, this people don't really understand it. They're not thinking about the miners. It's kind of the oddball sector, in my social circle, I'm the only guy in mining, and everyone likes to be some software or real estate because it's nice and friendly and everyone's okay. Nobody likes a guy that drills holes in the ground. So eventually, when you see the economics of it and the profitability, Warren Buffett through Berkshire, even though Warren Buffett didn't actually do it, it was his portfolio managers. But the point is, it's going to start becoming vogue, and we're just starting this. And you're seeing profit taking, and you're looking at from a 1950 level, it's actually cheaper, much more value investing to buy the mining companies than it is the commodity from that basis of flow of funds. So I think that's what you're referring to, and I think we're just starting to see that. We're going to social parties, and people start going, "Hey, mining, hey, Marin, like what's your favorite mining stock?" And you're starting to hear these questions.
Yeah, I think, I mean, it's been sexy in the past, gold stocks and silver stocks as well. And people follow the money. And we've seen it with crypto and these altcoins. And once things start popping off and they hear about their mate that's had a double or whatever, they start to get interested. I really think Robin Hood investors are driving even the S&P 500 because we're on such low volumes, and they just come in and they buy these indexes and passive funds and whatnot. But if you said to them, well, how do you get exposure to gold? I think a few people would know, GLD. Maybe a few would know GDX. But if you said to them, tell me the tickers of the top 10 gold or silver stocks, I don't think people would be able to name them, as you say. But I don't think the mining industry does a good job at all in terms of marketing themselves. And they don't have all these YouTube channels that are talking about the stocks. And I mean, you do it, but you don't see anyone other than, Kitco maybe. They're just not good at marketing to retail investors, are they?
Well, I hope it stays that way. It creates a great little bubble for me.
Yeah.
It's a great opportunity, because if I have all the smart guys start competing with me, maybe I won't be that smart anymore in our sector. So it is what it is. I'm just being facetious, but comes with a few things. When you look, my wife's a geologist, and my year of graduation, there was 7 in my math class. There was 600 in the history class of graduation, and there was 3 people in geology. Now, I was taking geology courses, and I took it flat out. The professor of my university ended up coming to work for me, Dr. Mark Buston. We became very, very close friends. And at the time we weren't. He was just a professor and I was a student. And he said, Marin, why do you want to do, like, I was really interested in the geology. He goes, there's no work here. You're a math guy. You're on scholarship. Stick with that. So you go that route. And there was this big void. Nobody wanted, because it's such a cyclical industry, Alex, you had this generation that realized that, well, I don't want to be unemployed, and I don't want to be away from my family 7 months of the year. And you had the tech boom come in the late 90s, and you just had low commodity prices, so they weren't attracting high paying jobs. So there's this vacuum, there's this void where you have these old guys and then these young guys who really just starting out, and they're low in the experience level. So mining is one of these really interesting sectors that they couldn't compete with the energy sector for jobs. So any of the geologists that did get a job, they probably most likely went into the oil side or natural gas side because it was higher paying. And then the mining side, it's just starting. Like, for years I created this, the top 10 under 40 list to invest in it. And now, these guys who were 28 years old and made a lot of mistakes, they're now 44 years old, and they built or sold 1 or 2 big companies. So the mining sector is slowly still growing, but you've had all the experienced guys get really old, and it is like an old sector. Like, one of the, we talked about one of the key early guys in Equinox was David Lowell, and today Solaris Copper is a huge success. But those were all David Lowell's. Those projects came from his mind. He passed away, and rest in peace. But you see these great mines starting to die, and geology is one of these things where you got to get out there in the field and experience, and it's a high risk business, and it costs a lot of money. So you haven't seen that much, over the we were in a bear market from roughly 2012 to essentially last year in the gold sector, and you had little windows of opportunity. But there's this void, and it's not a sexy business. It's a very difficult business. And, if you've been in the business for the last 15 years, you had a couple of good years, but you've had 4 or 5 years of true pain, and you've seen so many of these guys turn over. So I think that's part of the market. I don't believe is yet trusting the gold price. I don't think the market is trusting these mining executives that they're going to stay disciplined. But so far, the look at companies like Equinox, they're doing fantastic. Look at what Barrick's done to their balance sheet in just the last 5 years. It's been disciplined approach.
Yeah, that really important point about the Fed and the incentives that they create and the risk that they skew, and whether it's banks or companies that are just borrowing more debt and buying back their shares and whatever, there's no risk of failure with that Fed backstop. But that is all in the financial world and the digital world. And it's not in the real world, and that is where it's risky for a mining company to explore and dig. It's risky for a farmer to have a bad season, or a small business to start up, and that's where none of the money's being directed. So I think that all comes into, and it's a little bit philosophical and big picture here, but I think that all ties back into what you were saying with the relationship of the ratio from energy stocks or mining stocks to the S&P 500, because that's now being dominated by tech and all these companies that have benefited from the Fed and easy money. But at the end of the day, people need to eat from farms in the real world, or they need materials, they need copper and silver to build things. And there's just this relationship between the real world and the digital or financial world has got so skewed. Farmers are getting old and whatever. So I just think, as you say, whether it's cyclical, whatever you want to call it, there's a big change coming.
Well, the misinformation of it also, like, people go, for example, Exxon, for, I don't know, 125, 140 years, the greatest oil company, the largest oil company. It was only 2012 that it was still valued as the world's most valuable company, publicly traded outside of Saudi Aramco. And I think it was 2012, 2013, roughly, that Apple took it over. And that was big news at about 200 or 300 billion. And since then, Apple's gone to what, over 2 trillion, and Exxon's now out of the index. Let's think about that. Rockefeller's empire, it was Exxon, then Chevron, and now Chevron stayed. And it's been the lowest energy rating ever in the S&P 500, So, as a contrarian, you start thinking about, geez, is it time to jump in? Now, personally, I think there's more pain because as all the pension funds, the endowment funds, there's a pressure to stay away from the fossil fuels. But like you just said, that infrastructure, the medicine needs for that, the people forget, if you're on, Tylenol or painkillers or heart medication or, all these things, you need that industry. It comes from the petroleum products. So the plastic industry, all these things that people forget about. And, you're not going to learn that at the universities, right? Because that's not vogue to talk about it. But the industry has a way of solving itself, and eventually it'll be time to buy Exxon, but I just don't think yet.
Yeah, oil prices have remained pretty high when you look at minus $30 on a chart, at least anyway. So
38, yeah.
one thing we joked about, or I think I asked you about, was can natural gas get dragged down because it's a byproduct, or is the supply going to drop as the taps get turned off on a lot of these high cost drillers and whatever? So what's going on there? Is that starting to play out now, or why is the natural gas price falling?
Well, you look at what because shale isn't shut down. There's been this misconception that the death of shale is over. But you look at how efficient the production is getting, and there's no shortage of natural gas. You look what's going on in places like Qatar with their LNG versus the Saudis versus what the Russians are doing, and the Russians haven't even tapped into their unconventional fields. So there's no shortage of natural gas around. And again, there's been this push away from these fossil fuels. So it's just been this real rough rut. And you look at the drilling going on, plus the weather in the North America. So, it's been a milder summer. So the electrical demands aren't there. Just all of that compounded all together, it is what it is. And it's not, like we said, it's not going to change anytime soon.
Okay, so you're quite happy at the moment. being defensive, taking some profits,
Ah,
raising capital.
to me, it's about we got an election coming in the U.S. in November. Uh, Flip a coin, whichever way it's going to go, and you know, a little bit feels like it's going to be in 2000. And I remember in 2000, I remember sitting in quantum mechanics class going, they're going to court to decide who's going to be the president of the United States because they kept uh, filing against the way it was counted, and it all came down to Florida. I have a feeling it's not just going to come down to Florida this time. It's going to come down to many states, and we could see a situation where it could take not just days like the first in 2000 between Bush and Gore, but it could be weeks. What if it took months, right? And there's so much political tension. I know it sounds like a crazy theory, but there's so many unknowns right now, and the unknown unknowns and the known unknowns. And I just think that if you've got some easy profits, especially on non-core positions, in our newsletter, we've had an incredible run, and I've told everyone it's time to take the Katusa free ride. We've had phenomenal runs, and there's nothing wrong with just staying on the sidelines. And there will be another liquidity event. There's days where gold will drop, just 50, $60, and you've seen some of these guys, these mid tiers, guys that produce 500, 600,000 ounces of gold. That's not small production. Drop 8, 9%. So be savvy and remember these juniors. To talk about a field of dreams. A lot of these juniors don't have anything, and the liquidity. You can get in, you can buy the stock, but how do you get out? So you got to be careful with the windows of liquidity. And that's something I've been talking about in our newsletter and with your show for often. So there's nothing wrong with taking profits and reestablishing a position. Could I be wrong? And Powell's comments just make gold go to 2,300. Maybe I doubt it, but it's okay when you have cash. And the one thing I learned in this business, doing it now 17 years, is don't worry about selling. Worry about not having cash when the opportunity arises. It's not about luck. It's being prepared when the opportunity arises.
Yeah, exactly the same applies to crypto, and some of the DeFi projects have just had incredible runs, and people are still reluctant to take profits because they say, oh, well, I saw someone say it's going to keep going higher. But that cash on the sidelines gives you that freedom, and it's more valuable than just $1. It doesn't matter, it's not going up. It's as Marin said, if something crashes 60% in crypto world and you can buy it because you've got money when no one else does, that becomes very valuable. And you don't have to always be exposed. If you think gaming is the next thing in crypto, it doesn't mean you've got to buy straight away. It's the same in the mining space. If you've taken some profits on gold, it doesn't mean you've got to rush in and buy oil stocks because that's where you think the next theme is. It might be, wait 6 months to get in, like Marin was saying. Anything else to add there, Marin?
Yeah, like one stock, I'm very close to the president. They're a 1,000,000 ounce gold producer now, and we bought it under $3 in our newsletter. It got to $10. So during that time, I said, hey, let's take a Katusa free ride. I love this project. It's probably one of my favorite gold projects. True monster. Like when we talk about, when people talk world class or tier one, what does that mean? Well, this thing's producing, one mine is producing over 500,000 ounces, and it's in the lowest cost quartile of all projects in the world. That's a good mine. But then the company, so we took a free ride on it, and management, like we were there. My styles, I like to buy when everyone's down and depressed. I like to sell when everybody's cocky, when all the bankers are flying around in private jets. That's my exit. Now, literally within 60 days of us taking our free ride, there was a coup in the country. Nothing to do with the company, and the stock sold off about 20%. So the point is even the best projects, you'll be able to see market volatility for whatever reason. Did anybody see that? Yeah, there's been rumblings in that country for a few years, and it is in a negative swap line nation. So the point is in mining or resource development, expect the unexpected. So understand your risks.
Yeah, I think you can say expect the unexpected in crypto as well. And Katusa free ride, what Marin is saying is take out your initial investment, and definitely something you should do in crypto as well. I want to talk about Powell. So for those that don't know, this is probably going to air on a few hours from now. So it'll be out well before Powell's speech if you watch it straight away. He's talking at around midnight Australian time tonight. He has promised to make, what were the exact words? A life changing inflation commitment or something like that. So when, to me, that says when you've promised that you're not going to go down the negative interest rate path, all they can do is jawbone and talk about what they're going to do, and they've already said that rates are going to be low for years. So either it's going to be a big new operation, like some type of QE or operation twist or something. Well, any ideas what you're thinking, expecting from them, Marin?
I think it's going to be a good way of looking at things was, some of these shows that are popular in North America were first popular and written in Korea or something like that. I actually think that what Powell's going to be doing is an American version of what Japan and central bank has been doing since 2015, 2016, essentially. And, that's known as Abenomics. But, you know, poor guy's ill right now in the hospital. But Powell's going to take a twist of the Japanese side. And what does that mean? It just means throwing more digital money at the assets. And the way to think about this is, trying to control the yield curve. And that's their plan right now. And that's what the Japanese plan was. So what does it mean? Well, if you look at it fundamentally, it means more of what has been going on. So he doesn't want to take it to negative interest rates because that's that wild slope. Can he fight that in the near term? Yes. They admit that inflation is not the issue at hand, and everyone can see that. And if you question that, and all these people who believe that, look at any industry, whether it's the movie theaters, airlines, services, food, theme parks, whatever, across the board. Are they charging more to happen? And if they are, will it stick? Will the clients, will the customers be willing to pay for it, right? Those inflationary pressures happen because there's customer competition for that. You just don't see that yet across the board. So the name of the game for the Fed is to make sure that deflation doesn't take over, and they're going to do whatever it takes. And I think the Japanese model is the route that the U.S. Fed is going to be moving forward. We'll find out tomorrow, but that's my gut.
Yeah, yield curve control. It's been floated in Australia, but they didn't really have to commit to it. They didn't have to follow through and print a lot of money in Australia just yet. But I think if have you seen some of the numbers about the percentage of mortgages that are on pause in
It's
Australia,
insane.
and the banks are
But
so exposed. So the Australian Central
remember,
Bank, yeah, they could end up
it,
buying a
it,
lot of mortgages.
I'm with you. Exactly what's going on in Australia is happening in Canada here. It's insanity.
Mm.
Um, and in the government, we have something called CERB, CERB, and it's basically just kicking it down the road for the retail mortgages. And you look at what's going on, the rent, it's just, it is such a nasty, and the government is going to just keep kicking it down. They're going to get reelected in Canada right now. In the end of September, there's going to be a confidence vote basically between the different parties. Of course they're going to get it because they're look at the what's going on between. Is there really a difference between Democrats and Republicans? Money doesn't matter anymore to the politicians. They're just going to print more of it, and that's having this civilization spiral where people aren't focusing. Like, think about what happened in the early 80s when the interest rates went up. The banks didn't cover up for people to, there was, you're on your own. Now it's everyone's looking towards the government to defer the mortgage payments, to get the bank to go in. And then now you go to the bank, you got to make an appointment, or, everyone blames everything on COVID. Sorry, can't do it because of COVID. It's going to become the ultimate. The unions, what about, I don't know about Australia, but it's a huge issue here in Canada. Everyone's going to defer to COVID as a reason they can't really do their job. And it's this death spiral that's going to happen. And, when the politicians don't respect the budget anymore, and it's across, it doesn't matter what country, that's the new MMT concept, and it's here to stay, and it's going to evolve.
Yeah, 100% it's been used as a scapegoat. That is one thing that I do think Powell might sort of look to back up a huge infrastructure spending plan, and that would obviously boom. Do you have any thoughts on, copper or some of these other more industrial sort of metals if there's a huge infrastructure boom?
I think there's going to have to be. And, one thing I would lay it out is, and you and I have talked about this in the past, where the one mistake that Obama made in his administration, he tackled something like Obamacare, which was philosophical and it was so difficult for people because it was an entrenched ideological concept. Who, if Biden wins, I think he's going to go a different route. It's going to be $5 trillion, $10 trillion in infrastructure stimulus, offshore wind, just open up the spigots to go. And Trump, if he wins, it's going to be like, let's build America again. Let's rebuild America. So you see both sides going to go for it. And, what will that result in? I think copper, if you look at recycling copper, so, there's that percentage of the market. Then you also look at new copper. And, I was one of the founders of Canada's third largest producer. I do have an understanding of the copper market and where are those smelters, and because of the way the business has evolved in the last 40, 50 years, the smelters are in Asia mainly that the North American production goes to. And it's whether it's Japan, China, or Korea. Those are the big three smelters. But production of copper, but just under 40% of the world's primary copper production comes from two countries, Chile and Peru. So you look at that going on, they've got world-class mines there that are built and are going to keep going, and the government's going to do whatever it takes to keep it going. So even with COVID, a lot of those big mines have not shut down. So the risk with copper is the African production, the geopolitical risks there. I just think that in the near term, the growth that was required with EVs, I just don't see with what's going on in the economy that the EVs, the electric vehicle growth, will be what everyone's expecting. I'm a long-term bull on copper, but over the next couple, let's say over the next, I hate making kind of these time frames, but in the next 6 months, I don't really see a need that I don't see 350 copper in the near term unless one of the big mines like Escondida or Grasberg shut down. I just don't see that in the near term. There's no shortage of copper, but is there a shortage of, increasing the growth rates at 3% a year? That is what the question is. I just don't see that growth rate this past year or even early next year because of the spending habits globally. Will infrastructure project, big infusions change that? Of course it will.
And do you think that we're going to see a similar thing all around the world from all these economies are going to start to struggle, and as soon as one country does it, and I think it's more likely that others follow. So, even rebuild Australia, let's do high-speed rail, you're going to start to see those kind of conversations, let's make Australia renewable or whatever it is. But it's very difficult for these other countries to monetize that. Like we always talk about, it's very easy for the US to print all these dollars. And look, recently the demand for their bonds has started to drop off. But still, when you compare it to how hard it is for any of these other countries to say, we're going to spend $1 trillion on infrastructure and then print their own money, their currency goes whoop off a cliff. So any thoughts on all of that?
I think it's going to continue. You look at the commodity producing nations. They're look at the ruble, look at the tenge at Kazakhstan. We talked about uranium. Well, people go, it's uranium has to go higher. I go, well, then you got to focus on the major player, which is Kazakhstan, or Kazatomprom, which is the major producer, and Uranium One, which produces about almost 9-10 million pounds in Kazakhstan. That's the Russian-owned uranium out of Kazakhstan, and both of those currencies are getting destroyed right now. Even though everybody's saying how the US dollar is down, they're forgetting how the commodity producing nations relative to the US dollar is doing. So what I'm trying to get at is part of the reason why uranium hasn't gone to where all the analysts think is they forget that cut the kill strategy on the arbitrage issue between currencies, and they produce in their local currency. The mines are already built from foreigners' money that they're now cutting out to kill, and then they're dumping at that price, and the US producers can't compete with that. So that's another issue, and that you see more of that coming across. That's part of the reason why I say copper in the near term. You look at the peso, you look at these currencies, they're devaluing relative to the US dollar. So yes, you look at what Greece, the overspending on the EU did it. Japan has been doing it with their big conglomerates. Mitsubishi is totally funded by the bank in Japan. So all these different aspects, Korea's been doing it. And as this is going to sound crazy, it was when Nixon went off the gold standard in 1970, people forget that Canada did it 40 years before that. The UK did it 40 years before that. Russia did it 75 years or 77 years before that. Japan did it 70 years before it. So as horrible as everyone thinks that the Americans have been, they've been the most disciplined on that. And that's part of the reason why they have this, dominant state. It's not going to change anytime soon as the main currency globally. Eventually it will one day, but not anytime soon.
And do you think that it could be enough to strengthen some of these currencies? So if we have this big boom where everyone goes after this infrastructure, upgrading their economies, can we see the hedge funds that have 0.1% exposure to gold or gold stocks start to say, and the sovereign wealth funds say, well, let's invest all that retirement money in these projects as well, and that money starts to go from big tech into these plays that we've spoken about? That would be the floodgates opening, wouldn't it, when they're trying to get into a lot of these?
Exactly. And you'll see some of it. And people forget, like, you know, so much of America's manufacturing hub has been outsourced because of the cost of labor. But with robotics, and part of what's going to happen with the infrastructure plan is, as the electricity costs, which have come down considerably in America, and that's been two things. The success of shales made natural gas compete with coal first, then the evolution of lower costs for windmills and solar panels, because of the silica for solar panels is down like 95% in the last 12 years. So you see in all these improvements on those two fronts, electricity costs have come down. America will become competitive again on the cost of manufacturing. Now, the next step is their Achilles heel are strategic metals for the magnets. Those are an aspect that is missing. But America is a very big country, and it's got incredible endowment of minerals, just like Russia does. But America's got the technology. And, I see supply chains shifting away from China because there's a lot of, as we've gone from a globalized world, look, it could depend on which way the election goes. But if Trump does win, I do see this de-globalization, or, bring it back home, make America great. That's going to continue. And if Trump wins, I think what you're talking about will exactly happen.
Yeah, I mean, look no further than Australia, where China have cracked down on our wine. They're doing, looking in reassessing things like iron ore. So Australia knows very, very much about not relying on one country. But that's been another great chat. Hopefully, when we catch up this time next month, we've got plenty of action and excitement. Maybe the correction in gold will be over. But Marin, it sounds to you like you're quite happy for it to catch its breath for even a few months and hover around here before the next leg higher.
Probably the only thing I want to say is, so I'm publishing the data next week on how much money has been raised in the sector, and a, hundreds and hundreds of millions of dollars is going to be hitting the market right during the election. So that's restricted paper that was done in a financing that isn't trading yet because it's restricted, but the shares outstanding have been done. So think about float, like the liquidity in these stocks. So my question to everyone is, what new catalysts are going to come into the market to absorb all that paper that is going to be coming in, this waterfall of paper? So that's a deflationary event for a lot of these prices.
So you're
Be very
saying,
careful.
like in crypto land, people are familiar with the founders are getting their tokens unlocked and they're hitting the markets. You're saying there's a lot of that happening with stock and options in mining land.
Well, not founder stock, but like, these companies, specifically the juniors or the development stories, they don't have cash flow, so they go to the market. It's been very exciting, so they go to someone like me or Eric Sprott or Rick Roll or whoever, and they finance a project. And why I've been kind of being very conservative here is so much money. Bankers that I haven't heard of and haven't seen in 7 years are calling me up about this new great project in Papua New Guinea, and this great project in New Guinea, and the DRC. Marin, don't you know how much money the Lundin family made in and I just sit there going, yeah, I've been there, I know it really well. But my point of what I'm trying to say is, everything and anything's been financed here in this window in the last, let's say, 3 months. And now 4 months later, that financing paper hits the market.
Oh, okay.
And what happens to that share price? Unless you have significant new volume, well, there's more supply of paper than there is demand, so it's going to go down. So that's another thing I've been trying to educate people on, that, hey, you don't need to always buy stock, and you want to maybe take some of your big profits off the table before other people have a chance to take their profits off the table. So just little things like that to think about.
Fantastic. That is a good place to finish. That's all too common in crypto land, with more tokens coming and hitting the market very, very regularly. But we'll catch up again next month. I'll put the links to all Marin's free stuff as well as their paid letter. There's a discount for you guys, and for members, there's a bigger discount again in the group. So we'll catch up again next month. Thanks for joining us, Marin.
Stay healthy.
Cheers, guys.